and that is the pepperish part. Requirement 1 is fairly okay. But man, the requirement 2, I won't say it's horrible, but then that is ICANN standard for you. So, like I said earlier, he tested CR, which were standards, IAS 17, which is currently IFRS 16. Number 2, he tested tax. And that is why the case study is a compendium of all the 4 papers. They can test anyone, even in skill stage. So he tested CR, he tested tax, and he tested SFL. So in the requirement 2, he said a determination of whether it will be cheaper for Wonder Bank to lease or buy. So you are talking of lease or purchase decision for the robotics initiative. A brief discussion on the financial reporting implication of leasing option in the lease or buy decision, which is A here, and the implication on gearing. So you have to calculate gearing ratio and discuss the financial risk of that gearing to Wonder Bank. Then he said, take note that the calculation of that gearing, you should compare the pre-lease and post-lease scenarios. So he brought up this pre-lease and post-lease, which is a serious formula in SFM, assuming that the lease arrangement commenced in the start of 2016. So IFRS 16 on leases has not started during this question. It took IFRS 16 took effect January 2019. So it was IAS 17 that was still in effect, where operating and finance lease were different. But currently operating and financing lease are the same in IFRS 16, but the computations are not too different so much. So now let's go to the appendices and look at the computations. We cannot exhaust the computations here, and that is why I took my time to do a comprehensive tutorial, step by step, that even if you are just starting professional stage of ICANN, you'll be able to follow it. So this is the table, but the examiner did not tell us how most of the figures were derived. So I explained it in a tutorial separate tutorial, and that is from page 33. So if you follow that tutorial, you'll be able to understand the post-tax cost of debt. So now, the first thing is the post-tax cost of debt on table 1 on the robotics project. So if you look at the case, the discount factor for the project is 12.85%. So let's go to the exhibits and you'll see that. So if you read the exhibits, you'll see that expressly stated. I think it's after the unseen. Let me scroll through and look for it. Okay, it's not here, it's maybe behind. I want to look for the post-tax amount, because that's what we're going to use to calculate the good. So this is on exhibit 3. Now, if you look at the discussion here, you'll see that under page, what page is this? Under page 8. Yeah, page 8. Wonder Bank can borrow at an interest rate of 12.85. Capital allowances are granted on similar business asset on a reducing balance basis at 40% per annum. So this is the basis where we got this 12.8 post-tax cost, which is by 1 minus pre-tax. And the pre-tax is how much? 30%. You see that from the question, the tax amount is 30%. Where is the tax amount from the case? Good. I just did control find and search. So you can see the tax tax is charged on the Nigerian economy tax rate, which is 30%. So, and that's the calculation here we started with. So the post-tax is the effective interest rate. Then we have 1, which is a formula minus tax rate. And if you do this computation, you have the main effective interest rate you are supposed to use. So if you come to this tutorial, you will see that I explained it graphically, how the computations are. So this is the formula. See, the formula is post-tax cost of debt, which is equals to pre-tax cost of debt times 1 minus tax rate. So this is the formula. So I explained it in detail. I broke it down for you. So the step-by-step tutorial of how he came about with this table. So take your time and calculate. So from the case, you see that the project Sky High has a duration of 4 years. January 2016 to December is stated in the case. So now the NPV of the cost to buy first will now calculate the tax savings on depreciation allowances. Now, you know, it's at 40% and the tax saving is at 30%. So this is tax tested. Your taxation, you need to go back to your taxation. So if you are still writing tax, good for you. It will just be like a revision. But if you are not writing tax, then you may have to go back to it to revise, because this is graphically what is tested here. So if you come to my tutorial, you will see that I talked about the computation very graphically here. So you can see 1C, tax savings on depreciation allowance. So I give you the company's benefit from tax savings on the depreciation of robots over the 4 years. This is the initial cost. This is the depreciation rate. This is the tax rate. So now for 4 years, you do the TWDW. I remember all these things when I was writing it. It was really a problem in tax. But then if you don't sit down and practice computing it, you won't be able to navigate it and get it. So it's practice. The depreciation amount and the tax written down value. And you have your sum for the first year. You move to the second year. You move to the third year. Then you have your balancing allowance. You will be able to remember all these things. I also gave an alternative method. You can put it in a table. So you can see this balancing allowance of 375 million is the same thing you have here on the table. So any way you want to do it, I broke down everything for you in chunks with explanation. So this table that he did without any explanation, you can follow through. This tutorial is there with the explanation. Then workings 2. You can see the workings 2 here where he said cash flow for the purchase. So this is for buying and this is for purchase. So you can see the initial outlay of this amount, the tax savings you brought from this tax written down value. Then the net cash flows and the discount from the post. This discounting factor is this post cost that we used here. You can see I integrated SFM and tax in the same question. That's why they say, God, these people are wicked. They are not wicked. ICANN is just ICANN. So if you look at this second workings too, I broke down all the computations here. So using this rate, you can see the amounts and the discounted. So I broke it down with the present value and how to calculate. You know how to use your discounting rate, 1 plus R raised to so you guys know all those computations. So just follow through. You'll be able to understand these dynamics on the table. So that's how he derived the cash flow for the robots. So this is the present value of the amount. Then this other table is the workings 3. This rate of 6.681 you want to use for the leasing option. Let me show you how it was derived. Very, very pepperish. Now, if you go down to the workings, page 39, I stated how 6681 interest was derived. To determine this, you have to, the scenario represent the effective interest rate, that is SFM clearly, yield to maturity. You must have done that in SFM. Some of you are past SFM. Julie, you are past SFM. I mean, you've passed SFM. Namesake, you've passed SFM. So you should know this. If you don't know it, you have to go back. Now, from the SFP, you will see the debt and the for both years, this is the amount. Then the interest, because we are looking at the effective interest rate and how it yields to maturity. The interest rate, interest expense, this is the formula. Step 2 is to calculate the formula. And once you do that, you arrive at 6.681. But I must admit, under exam condition, you cannot do this. So you have to be fast. And that is why these are worst case scenarios. This is the worst the examiner can do if he's presenting a lease or buy question. So I advise students to just practice. He cannot bring something worse than this. That's just it. So practice, it will benefit you for, if you are writing tax, practice, it will benefit you for CR, practice, it will benefit you for SFM. So having done this MPV calculation, now there's a brief explanation here on the conclusion. Now you can see from the conclusion that the leasing option is cheaper of the two. And in determining it, we spoke about a brief explanation on the lease. So read it. Now table 3 is another pepperish talking about the determination of finance or operating lease. Don't forget that the examiner said something about finance or operating lease in his examiner's report. Though that was under IAS 17, but under IFRS 17 now, because if you test this question, you test it under IFRS 16. So he complained that candidates couldn't differentiate between finance and operating lease. Exactly. But then that's bygone. If you bring something like this again, you would merge it together because finance and operating lease are the same. So this is the computation for the finance and operating lease, how to calculate it. And IAS talked about the recognition, and these are the figures. So follow my computation step by step here. So if you come here, you see finance. I have determination of the lease, finance and operating. You can see how I came by the computation. Very, very step-by-step approach. It's easy for you to assimilate and comprehend. And that spoke to this table 3 on the lease. Then finally, the gearing, including lease obligation. So this gearing is what the examiner said you should do, and he spoke to a note in that. He said, note, for calculation of gearing, comparison should be made between the pre-lease and post-lease scenario, assuming the lease arrangement commencement at the first as at the start of 2016. So this is the lease. This is the gearing, including the lease obligation. So this is the debt in the SFP, and this is equity. And don't forget, you are calculating gearing. The formula is debt divided by debt plus equity. So you are looking at the external exposure to your internal and external exposure. What is the percentage? So debt is about 96%. That means the company is highly geared, or the bank is highly geared. So this is the computation. So just follow it step by step. You can see the computation here, step by step. So follow it. I also concluded for you and on the IAS. So the difference between both IAS is just the margin of operating and financing lease, but it's easy for you to decipher when you are computing. Or under exam condition, no, it's practically impossible to do this. And I stated the note here. I said the IAS 17 leases and the time it lapsed. It expired January 2019. So IAS 17 stopped December 2018, and IFRS 16 took over January 1, 2019. So this is for your information and future reference in case he tests it in May 2025. So now, having done this computation, the financial statement was provided again. Why was it provided? Because there was no significant difference in the gearing ratio. And that's why it didn't impact the figures. So the financial statements that was provided in the question, in exhibit, in the unseen, in the pre-seen, exhibit 5, we have the income statement, and exhibit Exhibit 5, okay, statement of financial position is the same. Exhibit 4 is the income statement. Is the same financial statement here. None of the figures were impacted because the gearing was over 96%. So there was no change in the financial statement. So if you look at this financial statement brought here, it's the same thing with the exhibit financial statement. So now, don't forget that your calculation, as pepperish as it is, everything in your calculation carries only 8 marks. All this wahala and the computation. So the case study is not a calculation exam, but you need the calculations to write. You cannot write without calculation. Where did you get the basis for? It's like building a house without foundation. It will crash now. So you need to calculate to some extent possible, then you can come up with your discussion. Discussion is where the mark is. So 8 marks alone is what is in that computation. All the wahala is 8 marks. Don't forget. So now let's go to the discussion. How do we integrate the computation into the financial story? So now, moving to requirement 2, we discussed requirement 1. So requirement 2 should start on a fresh page. Take note. Don't continue requirement 2 under requirement 1. So after you've done your recommendation and conclusion of requirement 1, you stop there. Then you start on a fresh page, no matter the space. Even if it's just one line you entered and you concluded requirement 1, please go back and start on a fresh page. It makes your work neater. It shows the examiner that you are telling him it's requirement 2 you are doing. Now, the requirement 2, if you look at the question for the exhibit, the examiner said, let me go to the requirement 2. He said a determination of whether it is cheaper for Wonder Bank to lease or to buy the robotics of the, or lease or to buy the robots for the robotics initiative. A brief discussion on the financial reporting implication of leasing in option A above, as well as the implication of gearing and financial risk of Wonder Bank Limited. So we've stated that in a header. So like I said in requirement 1, don't by any means write or financial data analysis. Don't do that as a header. You're going to be marked down. Or you come here as a header and say requirement 2. What is requirement 2? That is no information. So state the requirement even if it's in summary form. You may not copy it verbatim, but state the requirement. So like you saw in requirement 1, I stated a SWOT analysis. So this is requirement 1. Not that you write requirement 1, financial statement analysis. That is not a header. And these are nitty-gritties that makes the examiner mark us down. So requirement 2 is a determination of whether it will be cheaper to lease or to buy the robots for the robotic initiatives. Full stop. The financial reporting implication of leasing as well as its implication on gearing and financial is simple. So write that. So based on our header, we said we have 6 main headers to discuss under. So in requirement 2, we want to analyze financial information. So you can just talk about the general exhibits because this is data and information. So we're looking at the income statement of Wonder Bank, the revenue, the expenses, the core earning details. So you are just discussing generally on the information provided in exhibit 4 and 5. You may not even necessarily talk about numbers, just to pick your mark, to tell the examiner you're conversant with the data and information provided in the exhibits. So we've picked my mark here in this discussion. Number 2, we're talking about the balance sheet, the financial health at a given point, talking about the categories. So if you want to bring figures, you can bring it in. But don't forget this section is for discussion. And each header has 4 marks. So superior achievement, if you talk about 3, you pick 3 marks. Now, number 3, we said the commentary on the financial statement, Exhibit 5, provides insight into the company's financial performance, stability, and position. So we're just speaking to what is in the exhibit here, using data and information. And number 4, the information in the exhibit provided in Exhibit 1 talks about key insights regarding the bank's project, management expectations, and the communication serve as the foundation for decision making. So we are just speaking to the numbers, telling a financial story. And I gave you the fifth point. If you talk about 4, please move on. The fifth point is the email in Exhibit 2, stressing you to do an analysis of cost estimates, resource allocation, potential contractual obligations. So this is just speaking to the data and the information, and that's what the first header is about. I also talk about wider issues, regulatory compliance, ethical considerations, just on a general overview. That's why this first header is either analysis of the financial information or a general overview, like we stated in requirement 1. Then number 2, now you want to use professional tools. That's where you now analyze the lease and the purchase options. And this is where you reference your appendix. And that's why you must do appendix. Somebody in the last diet, one of the reasons why he was failing and he passed last diet was because he will not do appendix. He will just go and write report. He will read the case study. He will not calculate any appendix. He will just go and write report. And the examiner keep returning the paper back. So when he contacted me, I said, no, you must have appendix. Even if you did the calculation in your head, you must write it down as an appendix. So please quote the appendix. So from the professional tools, you want to start using the methods of analysis. So now in the first point of this main header, we're looking at the key issues on the cost benefit between leasing and purchasing the robotics. So we said from the NPV, the lower NPV of 3.5 billion compared to the 4.3 billion for outright. So this 3.8 billion is for leasing, while this one is for purchase. So you can see that leasing is better. So we said the lease qualifies as a finance lease based on IAS. We just explained that based on what the examiner said, that we should explain the lease option here. So we just spoke to that in this first point. So we also said the payments of, is about 92% on the gearing ratio. So this first point, we just incorporated what we did in the appendices. Let's talk about it in summary. Then you say C appendix. You see, this C appendix makes the examiner very, very happy because you are referencing the appendix that you computed. The second point is we talk about the gearing ratio, looking at the debt to total structure capital, like we did in that appendix or the tutorial session. So we'll talk about the companies being highly geared and the risk exposure it faces. That's the second point. Still on that gearing, we're still reiterating the gearing, but in another way. We're saying that the interest-bearing element, which was not here, results in this amount. And then the lease obligation slightly moved to this ratio, indicating that the bank is significantly financed through debt. So 2 different points or 2 similar points was said in different ways. And number 4, the estimates used in the analysis appears reasonable. The post-tax debt. So we're talking about that post-tax we calculated. The tax savings on depreciation allowance, interest calculations, all you can discuss, and you reference the appendix, C appendix 2. So once you give 4 points under the analysis of the information or the professional tools, which is your lease and option, you move. But I give you another one on the cash balances of the company, if they can purchase this outrightly or not. Looking at it, so this is what I discussed here. So if you want to buy it in cash or not leasing, do they have the money? So looking at this, I said the cash reserves are strong. A large outright purchase should be weighed against liquidity risk and alternative financing options. So we finished this main header or the second header on professional tools, which is analysis of the lease option. Then the third one is your analytical skills. And you are now detailing your analysis, the details of the lease and option. You are going deeper. Now that post-tax debt, you talked about the effective borrowing cost, the interest expense of 3.66 billion, the tax charge. So you are discussing what you just did in that post-tax debt in the detail. Now we look at the discount factors of the post-tax debt of 8.96 that we did in the computation. We brought it here to discuss. and talking about the 4-year period, reflecting the time value of money and how PV comes in, and also looking at the fair comparison of the NPV of both alternatives. All are in the appendix. So just speak to the appendix and you are picking your mark very seamlessly. The third point talked about the lease option, showing the lower of the present value of the purchase option. And we talked about the amount in million and the amount here to in million for both the initial outlay. All are in the appendix. So just discuss what is in your appendix freely. You have many to discuss. But once you get to 4 points, you stop. And the fourth one here talked about the gearing ratio, the total capital, the amount it culminated in, and how the borrowing funds increase financial risk, but also provide tax benefits for interest expense. Just like he said here, he said, what are the implications on the gearing and financial risk of Wonder Bank? So that's what we spoke to in this place. So it's easy to discuss if your calculations are a bit rich, but if you streamline your calculations and make them very, very slim, and you didn't adhere to the instruction of the examiner, it may be challenging to talk about. And in talking here, each header is for 4 marks. So if your calculation is not rich, you may not be able to discuss. So under the fourth header, we are looking at issues and options, challenges and considerations. So one of the challenges of the gearing ratio is that the option chosen is highly leveraged, looking at reliance on debt financing. So the inclusion of the lease liabilities in the gearing calculation provides a more comprehensive view of the financial risk, but the overall impact on gearing remains minimal, reinforcing WBL's dependence on borrowed funds. So it may be the same points you are speaking to from these other headers, but under the main header, it may be a challenge or a consideration. So bring it here to pick your point. The second point is justifying a stable gearing is essential for maintaining investor confidence. Now you're not even bringing any figures or numbers here. We're just talking about the gearing generally and the challenges or the considerations inherent in them. So looking at the stability in gearing also supports creditworthiness, helping Wonder Bank secure favorable borrowing terms. Giving Wonder Bank's high gearing, maintaining stability reassures stakeholders that debt is managed prudently, preventing sudden financial strain. So you're just speaking to the challenge and how the considerations could help the bank. The third option is the lease option for the bank is influenced by several factors. The lease term, the option to purchase the asset at a price lower than its fair value. So these are challenges you speak to under the header that you observed in the computations. Also, number 4, the factors affecting the purchase, workplace lease, and robotics primarily include the initial cost of acquisition, which is high, the tax implications of depreciation, allowances, and tax savings. So these are things you should talk about under these headings. I'll give you about 5. The non-financial factors also should be brought to consideration. It's a consideration because this element plays a significant role in shaping customer perceptions, retention, and market position. Very important. So if you give us 4 points under challenges and consideration header, you're good to go. So be mark conscious in writing so that you can pick maximum marks. It's easy to score 90, 80 in case study, and it's easy to score 5 for 11. Why? Because if you don't follow this header, the examiner will just mark you haphazardly, and you'll be wondering, how did I go so low as 11, 9? Yeah, so there are fundamental issues that made him mark you down. So just follow this structure and you'll find it very, very interesting in any case study. No matter how pepperish requirement 2 is or 1, you have something to write because you compute something at least based on these headers if you understand them. Okay, so the 5th point, and very important, like I have always overemphasized, critical and ethical issue. If you don't talk about ethical issues, you are having slim chances of passing case study in both requirements. So the critical or ethical issue now on this leasing is about the acquisition of the asset. So the immediate full outlay, which can be beneficial for managing cash flow and optimizing financial resources. The bank's ability to offer high quality lease assets such as equipment, vehicles, technology enhances operational efficiency and competitiveness. So we're looking at the quality of the lease service in reflecting the bank's reputation. So it's critical. So this one is a critical matter we're talking about on the lease option. We said ensuring smooth business operations while preserving liquidity. So this is critical. Now, the second point is on controls over cost and timing of cash flows. We're looking at how the bank employs stringent cost control, including regular monitoring and analysis of expenditure to prevent inefficiencies and ensure the resources are allocated effectively. So this is critical to the success of the lease or buy project. Number 3, the tax implications. Now, this one is an ethical issue of capital allowance. Capital allowance, which provide tax relief on capital expenditures, can help reduce taxable income by allowing depreciation of asset over time, which is what we computed in the appendix. So ensuring a holistic analysis that incorporates this consideration allows the bank to effectively manage its tax burden. So this one is an ethical issue. And if they don't manage it well, it may lead to tax evasion. So take note of that. And if they manage it well, it will improve cash flow and enhance financial performance. Another ethical issue surrounding Wonder Bank is the issue of transparency, fairness in financial reporting. It was not said that the ethical standards or the audit, the audit of the financial statement, it was not said that was this in the 5th point anyway. But then this 4th point, I'm speaking to the fact that ethical standard in lending practices, avoiding conflict of interest, and ensuring that loan terms are clear and fair is an ethical issue. So that's even aside auditing the financial statements of the bank. So the 5th point is where I brought that to be. I said we need to evaluate to determine whether it was not stated whether the financial statement has undergone audit. So you need to bring it out, which is a major ethical issue. If financial statements are not audited and is presented to you in the exam, you need to bring it out as a major ethical issue. Because management, we need third-party verification of the financial statement. Management could just bring financial statement, but if an audit firm or an auditor has not looked at it, it is not verifiable or valid. So that's an ethical issue. So I gave you 5 critical and ethical issues which you must discuss under the requirement 2. So please take note of it. And if you do 4, you have superior achievement. We discuss 4 of them. And finally is risk assessment, which is your evaluative skills and judgment. We're looking at how crucial it is for the costs like initial purchase price, maintenance, repair, insurance, taxes, finance costs that will arise over time. So these were not really factored in. So we are assessing risk or evaluating the findings that are saying that, the additional cost underestimated or omitted may not provide a true clear picture of the total cost of the asset they want to purchase. So it's essential to project for potential long-term expenses to ensure comprehensive and realistic financial analysis. So you are evaluating and doing risk assessment under this header. Also, we are looking at the 2nd point and saying, aside using NPV or those methods we use, they can also use EVA, economic value added, which focuses on true economic profit. We can also use balanced scorecard. So you are also giving an alternative in evaluating your findings. Could suggest balanced scorecard to management that evaluates financial and non-financial indicators, which can offer deeper insights into potential value of the investment. So you're also providing alternatives here based on what you've evaluated. And the 3rd point is the interest rate used by Wonder Bank for financing decisions could be higher, depending on the various factors such as market conditions, risk assessment, and the bank's cost of borrowing. And the 4th point, other issues that may affect the bank's market value per share of Wonder Bank and operational efficiency should be brought into cognizance too. So 4 evaluative judgment from what you've seen in the case and what you computed generally could be featured here. It's very important. And finally, we'll now conclude. The conclusion is very important. You must conclude and recommend, without which you have slim chances of passing. So the conclusion now of our lease and buy option is the leasing proves to be more efficient based on these figures we calculated in the NPV. Purchase is 4.3 billion, while leasing is 3.8, indicating lower costs. So that's what we're concluded on. B, the gearing ratio slightly increased in financial risk due to the lease option. Current gearing without considering the lease obligation is about 95%, while the lease obligation, the gearing rises to 96%. So we are saying despite this increase, the overall risk profile of Wonderbank remains largely unchanged. And don't forget that here they are talking of the impact on the financial risk of the company. We need to remember that in the requirement. So address the examiner's requirement as he states it. So we concluded number 2. And number 3, we said other factors not explicitly considered in the analysis include the impact of potential inflation, interest rates, forex, FX, and all that. And that's what we spoke to the number 3 conclusion. Number 4, financial considerations, several non-financial factors, strategic alignment with the bank's long-term goals, could enhance operational efficiency or improve technological capabilities. So this is the 4th conclusion. So I gave a 5th, talking about the weaknesses of the lease or buy and the financial model also used. So if you talk about 4 conclusions, you are fine. Like I said earlier, the conclusion is your statement of the issue or the problem, and your recommendation is the solution to the problem. So we're recommending that Wonderbank must understand and consider methods, the methods used. Tools like gearing and the tax savings will make informed decisions that optimizes financial efficiency and minimize risk and aligns with strategic goals. So this is our recommendation. Number 2, we recommend that they prioritize the consideration of information, its accuracy, and it will impact decision making. So that's number 2 recommendation. Number 3, the broad range of factors in planning should be factored in. Beyond financial consideration, they should consider strategic, operational, market factors. Assessing, and this is how to do it, they should assess market trends, consumer needs, competitive positioning, and this will help. And finally, we strongly recommend that they should consider maintaining the robots to ensure they operate for 24 hours. So these recommendations are specific to the conclusions. Make sure you align them with it in the discussions. Then don't forget to sign out as the person in the case. So some people use the audit firm. Maybe they say yours sincerely, they just say Hardly, Deolu and Co. Fine. But please make sure you sign out as you finish requirement 2. Yours sincerely. I prefer using myself in the case. But if you use the audit firm's name, it's fine. Because I'm the one that did the report, even though I submitted to my supervisor for review, but I'm the one. So sign out yours sincerely, Mario or Lorraine, and your appendix comes here. So now let's go and see how we integrate that into our executive summary. So after we've talked about the executive summary also, here in the requirement 1, don't write financial statement analysis as the header or requirement 1. State what you are asked to do very shortly. You can see requirement 1, I said, is SWOT analysis of project high of Wonderbank in 1 line, since it's an executive summary. So I stated what the report is about, the aim. I stated all calculations and the appendices. Then I stated my reservations. And I also assumed that Wonderbank is in the maturity stage of its life cycle. So any assumptions and reservations, please state it as you are starting your executive summary before you go into the main point, because the executive summary is 20 marks and you must not go more than 2 pages. Minimum is 1 page, maximum is 2. I see people write 3, 4 executive summary. That's no more executive summary again. So executive summary must not be more than 2 pages. Please take note of that. Very, very important. Okay, so the requirement 2 now, you state it verbatim. Don't say requirement 2. You're going to be marked down. So state it. I said a determination of lease or buy on the gearing and financial risk of Wonder Bank. Simple, in one line. So I talked about the NPV analysis that shows that leasing is more effective than purchasing. So I'm concluding, resulting in lower financial burden over the 4 years. I also included the gearing of 961, highlighting the bank's heavy reliance on debt, which raises financial risk but offers tax benefit. So these two conclusions are just like highlights or summaries. Then the conclusion you did that we just discussed is what you should bring here in just one line. So the first one is leasing is more effective than purchase. Simple. Number 2, leasing options slightly increases financial risk. Simple. Additional financial factors include potential inflation. Simple term. Beyond financial factors, number 4, several non-financial considerations are crucial. Number 5, the analysis tool to evaluate lease have both strengths and weaknesses. So you have concluded and you summarize your recommendation. The bank should understand and consider analysis method to ensure comprehensive, accurate evaluation of financial implications, risks, and outcomes. They should prioritize accurate information and data-driven solution. Number 3, they should consider broader range of factors in project planning and execution. And number 4, the bank should ensure regular maintenance of robots to 24. What we just discussed in the main header or in the main discussion is what you summarize in one line. So please, your executive summary, once again, I admonish you, don't go more than 2 pages. Please, 2 pages max. So looking at the executive summary and the format, now from the first page, this first page is 4 marks. So it's an external report and is addressed to the board of directors. So this is the header on page 1. A lot of people got this one. Then the report is not on financial statement analysis or financial data analysis. Some people make that mistake. Quote the requirement. That is what the report is on. And connect them. So requirement 1 is on SWOT. And I connected it in this place by saying, and a determination of whether. So you just make it one full sentence, but you've connected requirement 1 and 2. Then prepared by you. So some people prefer writing the audit firm's name. Is okay, but I prefer writing my name. Who am I in the case? Then the date. And for an external report, there must be disclaimer. If you don't write disclaimer, it's going to deduct 2 marks for external report. The disclaimer is very, very essential. Please take note of that. So after you've done your cover page, you pick 4 marks. We go to the executive summary, which is page 2 and 3, and you pick 20 marks. That's 20 marks. But executive summary has to be written after you've done your discussion. So this introduction page is just 2 marks. It's just copy and paste. So you are introducing the same thing you did in the executive summary with the analysis. Then in reviewing information, what are your reservations? Then you just do a report outline. So this is just 2 marks. You just do it to pick 2 marks. So the report outline will tell us your cover page, executive summary, the introduction, the background, scope limitation, where it is in the report. You just state the pages. It's just 2 marks. If you have time, you do it. Some people don't do it. They're like, there's no time for that. Then the background is copy and paste. This one too is 2 marks. If you look at the format I shared on the platform, it's a PowerPoint. The format is there clearly. So just write the background in summary form of the company and what are the scope and limitations. So the scope they give us is just 2014-2015 financial statement, and there was no cash flow statement provided. So all these were our limitations that form part of our reservations. Some of the information, they didn't give us cash flow, no projected cash flow, no notes to the account, no other comprehensive income, and any other thing you think will have enhanced your report better, state it here as your limitation. So that's the 4 marks you can pick from this page 5 and 6. And then after that, requirement 1. So that's just the simple format of how to answer the case study. But then I'm glad we are starting with this pepperish one. In fact, a lot of us opine that, I wrote rubbish. I like it. I'm glad you are realizing now that you wrote rubbish. So that by the time we do mock 1, mock 2, mock 3, and you have the solution, as you are reading it, and you can see I comprehensively pen down my thoughts in clear English, even though I have to look at dictionary to reduce some of the gravity of the grammar. But at least you can read it and follow through. So the next mock that will be coming tomorrow, go through the pre-scene. The unseen will come next week. Then we have next weekend to write. You can use this format and this report now to carve that one out. So as we are practicing, we are improving, we are doing better. And by the time we get to May, like one of my students that wrote the last diet, she scored 68. That was her second attempt. She was like, wow. It was like, this practice really helped me. And we did 6 mocks on that group, 6. So that's just the way to ace case study. I told people that I wrote May 2019, but you see from November 2014 to May 2018, November 2014 to November 2018, I practiced all the diets under exam conditions. I think there were about 9 diets that time. I wrote them, I practiced them, and they were sending us mock from Lagos because I used Platinum Gold as my tuition. So they were always sending us weekly mock. It was almost becoming burdensome. But then it helped me. At first attempt, I scored 78 without even addressing requirement 2 very well because there was no time. But you see, if you follow this format and practice it well, just keep practicing, you'll get used to it. Most chartered accountants don't like reports. They don't like writing. They prefer calculation. And that's why you see somebody pass SFM, piam, pass CR, piam. But when it gets to case study, why? Because it's more of reports. It's more of report. You need to write. So you may not be able to write the volume of what I wrote under exam condition. It's practically too voluminous. I understand that. But write to a reasonable extent that will earn you your marks. It's easy to score 70. I've written is why I scored 78 is easy. I'm telling you it's easy. So take your time, read the reports. As you are practicing, we have the first mock. So second one, adjust with your mistakes. And when I send you also your script, you'll be able to see your pitfalls. I'll give you my honest feedback on what you did and what you didn't do. So that will be the end. We are already 10:15 because we didn't start early. Okay, so at this point, I will take questions so that we can close. Any questions?
Yes, please. I didn't see you with the appendices. You said those pepperish appendices for requirement 2. The calculations.
Of course. I discussed them earlier now. Didn't you? Were you not following me?
I didn't see it. Maybe I was sleeping. I don't know what.
I discussed them.
The calculation. These ones.
Yes.
All these ones. You did it.
Exactly. We did it now. I discussed them and I said, if you come to this tutorial page. At the beginning, yes.
Look at this. Then I had not joined. Okay, I had not joined then at the beginning.
Maybe you've not joined, yes. Look at this tutorial page. Look at this tutorial page. I said all the calculations are here succinctly. Yes. So if you follow this step-by-step approach, you will see the appendix, how to follow through. And all these derived figures. And I said CR, SFM, and tax.
I remember you saying all of that. Was going through the calculation.
Exactly.
Okay, I think what Judith meant was that you should show us how you made the computations, right?
Exactly. Yeah, you didn't do all of that.
So if we are going to do that, we are not going to live here. If I will not finish this diet today.
No problem. It's okay. We'll go
and that's why I took my time to do these tutorials. So if you read these tutorials and follow this appendix heading, it's very, very comprehensive. Like this post-tax cost, every computation is here. I stated it clearly. So read it. If you have any even challenge, we can set up another call and come back to it, because my goal is for you to understand it. So you can see the formula here. I stated it for post-tax. So just follow it, one by one. Follow the tutorial. It took me 2 days to do this. So it was not
this is
small
4
work.
marks. And this is just 4 marks. So.
These 4 marks, thank
Abi?
you. That's why I said under exam condition is impracticable.
This is impossible.
Exactly.
So where are we supposed to get the
How
figures to
is that
analyze the reports?
So you write to some extent, and that is why you need to start practicing now. So you write to some extent, you cannot finish. Like I said, I didn't finish requirement 2. In fact, I started computing, and when I had 30 minutes, I just left it and went and started writing. So what the examiner wants is attempt. Like requirement 1 in this diet is very sweet. Requirement 1, there's no reason why you should not score 32 marks. It's just SWOT and applying the SWOT. So he did it deliberately. He made requirement 1 very simple. Then he peppered requirement 2. So if you get 32 in requirement 1 and maybe get 10 or 5 in requirement 2, then from your executive summary, you get maybe 15. You have scored 60. Exactly, you've scored 60. Yeah, so requirement 2 may be pepperish, but then requirement 1, do it well. Somebody asked me a question that can he do requirement 1 and pass the case study? I say it's yes and no. He say why? I say yes in the sense that you may, since you did requirement 1 very well, and no is that you flaunted the examiner's instruction. You didn't do requirement 2.
Yeah.
And the examiner is not looking for perfection or answer. He said attempt. So if you start and time went on and you wrote some and left it, you'll be like, oh, it's because of time. This guy knows what he's doing. Because there's practically there's no way I will score 78 with that level of output I gave in requirement 2. Because the result surprised me. But then you need to attempt requirement 2. It will be pepperish, but form a base. Just do the project, NPV, you have the initial outlay, just do something, scramble something and start writing. So during this practice session, just look at all these tutorials, look at the appendix, follow it, then practice with it. So if you feature something like that, you find it easier to navigate. It will be hard to go to the exam hall at first sight, not seeing a question, and to attempt it, man, it's going to be stressful. And that is why it's good we keep practicing and practicing and practicing. All right, so any other question, Julie, from you?
No, it's okay, sir. Thank you.
All right. So, Aminu, namesake, Aisha, any question? Oh, Aisha has left the call. Aminu, you are muted. Do you have any questions?
No, sir, I don't have anything to say at all.
Okay.
I just want to use this avenue to appreciate all the good things you have been doing for us. May Allah, Almighty Allah, reward you.
Amen. Amen. Thank you so much for those kind words. I'm grateful.
Thank you so much, sir. Good night.
All right. Good night. Okay. So, namesake, do you have any? You've been quiet, though. It's only Julie that has been speaking. Or maybe he has even slept. All right. So, Julie, will you give me?
Okay.
Yeah, maybe he has slept. Yes. So, will you give me feedback on the computation, because you seem to be bewildered with the requirement too?
I'm bewildered, my goodness. Try. Honestly, it's I'll print it out and go through it. Yeah.
Yeah, it took me 2 days, so I was like, why will I can't do this? I said, but then it's an exam, so it's doable.
It's an exam, yeah.
Yeah, it's an exam, it's doable. It's fine. It's all right. So our mock exam will come